Hello everyone, welcome back. Let me just double check. Okay, everything's all set up. So today we're going to be playing some more Speculator. Today my main objective is to go ahead and recap of last episode. So last episode we basically took advantage, oh no we didn't really take advantage, but what we did is we were basically able to do very well with the bond market last episode. So last episode I was buying a bunch of bonds around this level, and I was basically buying long-term bonds and betting that interest rates were going to fall. And I was right, because at the end of the day there was a giant recession because of subprime mortgages, part 3. So that was pretty interesting. And then during 2022 there was also a recession. So I found that pretty interesting, I guess. So like we were able to basically make a good $80,000 profit last episode. So this episode we're at $246,000 in cash. I'm gonna go and get the music playing. That way I'm able to. Okay, sorry about that. So what we do today's episode, we have a bunch of cash and cash equivalents that I plans on putting to work, maybe in some short-term bonds. And we're also going to go ahead and maybe get out these corporate bonds that we bought last episode, and maybe the government bonds. So I'm hoping that we're able to go ahead and do very well. My main objective is try to hit 19 million, because last series we hit 19 million. So sadly it's been almost 8 years, I say 8 to 10 years in game time. So we still have quite a bit of time to play this game. So it's actually we just played 8 years, and that was about a 3-hour stream. So yeah, so this game takes quite a bit of time to beat, but I'm hoping what we can do in this episode is try to hit 1 million this episode. I think that'll be a great goal. I want to try to hit 1 million, and then once I hit 1 million, I feel like then the snowball restarts, and then we're going to be able to hit tens of millions pretty fast. So we're gonna go hit the play button. We're at 95 speed. That's decent. So we can see right now that the short bond is having a bit of a minor sell-off, but it's mostly kind of staying flat lately. So you can see it's kind of staying flat. So like that has me a little bit worried. Hence why I sold most of my bonds. And hence why I'm keeping a lot of cash, is because I don't want rates to go up and then it will hurt our profits. But if bond yields continue to fall, we're still going to benefit from it, because we still have $100,000 in bonds. So where we're at with cash flow, we have about $1,000 we're getting in interest, which sounds like a lot, but that's off of $240,000. And then we have about $400 off government bond interest and $8,200 off of corporate bond interest. That's government bond, my bad. And you can see we're going to be getting $50,000 in cash soon. So I have plans on putting that towards another short-term 1-year or 2-year bond. Depends on when I think interest rates are going to rebound. Because once interest rates start to rebound and they start hitting what I like to call is my sweet spot. So in this game, I generally have an area where I like to buy bonds in this game. So usually around the 6% I consider it. And then 8 is usually when I start buying a lot. And then whenever interest rates go up above 8, I just simply reinvest my coupons. So you can see right now that the average interest rate is probably around, like the highest interest rates are from 6 right here to around 8 right here. And I feel like if we look in the past, I feel like it was 10. So it went from 10. So like I'm just trying to time the cycles of the market. So with stock market in general, the stock market every 2 years generally it has a correction. And so with the stock market every 2 years or so it has like a correction. So yeah. So right now would be a good time to participate in equities potentially. So maybe I might buy up some convertible bonds because the stock market had a bit of a giant sell-off, and then now it looks like it's starting to recover. So I feel like right now I'm going to go ahead and maybe try doing a bit of convertible bonds that are short term, and they're highly able to pay me back. So I feel like that's the name of the game. So we're going to do just a convertible bond. Do 0% premium. Or we could do bond ETFs, but I'm not really interested in that stuff. So what I'm looking for with convertible bonds especially is we're looking for like the price. So if the price is above, way above 100, for example, AXA Group is $150 per bond, and if you look at the yield to maturity, it's 0. So we're not going to make anything off that bond. And I'm going to go ahead and also pick up the date. That would be helpful. So right now it's 2030. So now we're going to build up our bond portfolio. So I'm thinking about going into convertibles just for some capital appreciation. So we can get into Baidu Inc., which seems like a pretty decent bond. It's a 10-year bond though, so that is quite far out. Might just do my profit into a semi-long-term bond. I feel like that wouldn't be a bad idea. So at the moment we have like around 46,000. So I'm probably gonna put 50,000 into a pretty long, just a convertible bond, and I'm hoping that that convertible bond does very well. So what I'm thinking about doing is I'm thinking about doing Baidu Inc. maybe. So if they're like a tech company, this could potentially be good. $100,000 of business assets, $7,000 in their free cash, so they can almost easily pay off their bank, their bond that they have issued. They also have a bunch of accrued tax payable and some contingencies. So right now they have about an equity of 112 billion. So that's pretty crazy. And the stock is right now, what I really like is basically almost at book value. So this company is very cheap. And if their earnings is going to grow over the long period, then this is going to be a very good bond that I'm going to buy. 10 price to earnings, that's reasonable. Very little debt and a decent ROE. Not bad. So we're expected to make 10 cents a share in earnings. So with that in consideration, they actually might underperform this year. But they're in internet service content. And the most of it is owned by the public. So I might just pass up on that opportunity, honestly. And today, this episode, we're just gonna just keep a bunch of cash at the moment. So you just saw the news that the banks are growing more aggressive in lending. So that means that generally interest rates are gonna go down because they're less picky on who they're lending to. So the supply of credit is going up. When the supply of credit goes up, generally the interest rates start to fall in this game. Okay, cool. We just got $50,000. So now we're at a good old 300,000, and we still have some bonds. And so if interest rates continue to fall, we're going to benefit from that. What I'm hoping that interest rates fall to 1% on the short bond, and then I'm going to try something a little bit risky that I usually don't do in my regular strategy. I'm going to try shorten an ETF that does bonds. And then that way, whenever rates go up, it's going to hurt the value of the ETF, and we could potentially make a few extra thousand in profit, potentially. Cool. So hopefully interest rates continue to fall, and I'm going to be able to make a bit of money off of things. So if you look at like the support right now, like the support looks like it's around 1 there, less than 1 there. Or like 2 there, or like 2 here, less than 1 there. And then like right here, it's around 2. About 2.5, 2.8 right now. So I'm hoping is that interest rates continue to fall, and then I'm going to be able to short the bond ETF. So right now, GDP is starting to launch off like a rocket. So that has me a little bit concerned that interest rates are going to go up because the economy is starting to recover. So that might actually bring up interest rates in the future. Who knows? Oh yeah, GDP is now officially positive, so now interest rates are going up. So let's go ahead and take a bit of a risk with my strategy and try to see if this is actually a viable strategy. So right now, interest rates are going up. So right now, I'm going to do a bit of a riskier strategy that I usually don't do. But right here, we can see fund investment strategy. So we can see that we can buy up bonds right now. So we can theoretically short a junk bond ETF. That might be a good one to short, because like they're junk bonds and they're potentially very, very high risk. But I've never tried shorting the junk bond before. I've always shorted the government securities ones, and I've done that a few times before. So I'm gonna go ahead and try out shorten the government prudent securities. So right here we got that. It's a buy from analysts, but I'm gonna be a contrarian and go against what everyone else is thinking. Right now I'm thinking that interest rates are gonna go up, and so what we're gonna do is right now it's at how much dollars a share? $70 a share. So if we look at like the chart of it, right now the chart is up quite high, and like it looks like it's at its all-time high. The only problem with this transaction is I'm going to be shorting it. So if interest rates continue to fall down, we might be in a bit of trouble. But I'm going to do it a decent amount of leverage just to short it. So as of right now, we have a net worth of $300,000. Okay, and then I'm thinking about maybe doing half of our account in leverage. So we're gonna take out $190,000 worth of shorting on the stock, and what we're gonna do is we're simply gonna borrow it from someone else who has shares, sell it at market price, and then hope that the value of that ETF falls. If it continues to go up, we could lose everything. So I'm hoping is that GMB goes down in price. So what we're going to do is we're going to basically bet that interest rates are going to go up. If they do, we make money. You have no shares? Do you want to sell the short? Yes. So right now we can see that it's $70 a share, and I want to do $190,000. So we go ahead and divide it by 90.21. Oh no, 70.21. My bad. So we're going to go in short about 2,715 of this ETF. 2717. Let's just round up. Okay. So you will be shorting 2,717 shares of the stock of prudent government securities at $70.14, less the commission, and for $190,000. So right now we're going to be betting that interest rates go up over the long term. The only problem is with our holding, we actually have to pay a dividend of 4.4%. So if we actually look at like the actual company and how much they pay out per share, so we look over here, where's the dividend payout? $3.10 a share. How many shares did we short? We shorted 2717. So we're gonna have about $8,000 operating costs basically for this short. We're gonna have to pay about $8,000 basically a year, just basically to operate this short, because we have to pay out the dividends. But what we're gonna be doing is we're basically gonna be betting that it's gonna fall. If the stock goes up a lot, we actually lose everything, because with a short you can lose infinite amounts. But right now I'm thinking that's very, very unlikely. So that's why I decided to do it. So I'm hoping that interest rates continue to go up and that this is the bottom of it. So I'm hoping that this hedge works out well. So I'm going to go ahead and fill up the company. So now we can see that it's $67 a share. 69. So we got charged a dividend. Charged for dividend. It's no big deal. Declared 77 cents a quarter. So that's quite a lot. Okay, so today what we're going to be doing is we basically went ahead and shorted that bond. So the bond's at now $60. So if you look over here at how much profit we made, we've actually made $16,000 in profit off the bond short. So we're at this trade is actually semi-profitable. So like we actually kind of broken even. So right now, if interest rates continue to rise, basically the ETF is going to get hurt really, really badly, which I'm hoping. So the government has raised corporate income taxes to 25% to pay for pre-election increase in social benefits. So extra taxes makes me think that basically people are going to get hurt tax-wise, because generally if you have more higher taxes to pay, you have less money to spend. And so with that in case, they're also doing social benefits, which makes me think that interest rates might fall. But they actually rose. So now they're at 4%. So I'm thinking once interest rates start hitting the 6% yield on the long bond, I'm thinking about covering my short. So right now we're at $400,000. That's pretty great. And right now we have about $300,000 in cash. So that's our negative. So this is our short that we're doing, and we also have some margin balance for our short. So we're at $400K in cash right now, which is pretty great. If we can see right now, we made $23,000 just off this short. So like that's one of the benefits of betting that interest rates go up. You can make a little bit of extra money in this game whenever you think interest rates are going to go up. So I'm going to continue with this short. Hopefully we can make bank off of it. Almost 5%. So right now they're starting to hit like a kind of like a bit of a support line or something. So I'm going to say interest rates are somewhat moderate right now, which is very, very interesting. Got charged for a dividend. Retired its bonds. Cool. Okay, interest rates are at now 6. So this is when I start considering making bond investments. So it's very, very interesting. 6.44. 6.5. 6.6. Okay, it looks like they're trying to... It looks like they're slowing down. Or at least slowing down a little bit on their... basically... Oh, never mind. 7... Oh, here we go. Banks continue to tighten lines of credit for corporations. So interest rates are likely to continue going up. 6.8. So I'm looking at the short bond, just trying to see how things are. $6.3. Oh, looks like they fell a bit. Tesla Motors product liability litigation. What are they thinking? Neutral. So they have no clue whether or not rates are going to go up or down. Interesting. Huh. Okay. So I think interest rates are pretty likely to maybe continue falling down, or they may bounce back up. I have no really clue. But then again, GDP is pretty good right now. Like GDP is at 3%, which is pretty great. And oil is cheap, so that makes me think that potential there could be deflation, and commodity prices right now are quite cheap. So part of me is thinking that the likelihood is that we're not going through much inflation right now. Like the economy's going good, but the inflation is very, very low. That's why commodity prices are very, very low. So I'm thinking part of me is that interest rates are going to continue falling. So I'm not going to be greedy. I'm going to go ahead and take my $36,000 in profit. So what we're going to do is we're going to buy it back. And then we just simply say yes, because we're going to basically get cancel our trade for our short. So we're gonna buy back the shares. I'm gonna buy back 2,717 shares. So keep in mind we made about a $13 profit per share. So if interest rates continue to go up, I'm gonna be a little bit bummed out, but we still made a decent amount off the short. So potentially, how much did we make? So we sold at 70.14 minus our cost basis, 57 dot, minus our price that we sold at. So we made about a 17% return off that short, which was pretty decent. And so I plan on putting this profit towards buying up more bonds. So we made about a $34,000 capital gain off that transaction. So we used almost $200,000 to make $30,000. So if you just do 34,000 divided by about 200,000, we made about a 17% return in that case. Pretty decent. So what we're going to go ahead and do is, I don't know whether or not interest rates are going to fall or not. Like this little sell-off over here has me a little bit worried potentially that interest rates may continue to go down. So I'm just going to buy up a little bit. We're just going to buy up like 50,000 maybe. Oh, okay. Permanent Government Securities actually has a bond. It's not that good though. It's like, what date is it? 2034? Oh, so it's like about 4 years out. I have no clue. Let's just do a recall. Let's just get into a convertible bond. Let's just do like a 4-year convertible bond because I feel like this might be interesting, or like a 6-year one. 7-year. Coleman's. Yeah, this one's paying me about 8% coupon. That's pretty great. Okay, so I researched Coleman's. About 1,000 cash, enough to pay off their bond. Sadly, they have a bunch of bank loans, so that's a variable piece of debt. But they do have quite a lot of equity. So a little bit above the book value. The company hasn't been doing all that well over the last those 2 years. They did all right that year. They didn't do so well the year after. This year might be a lot better though. So this year's a lot better. This company might be a great buy. They're expected 37 cents a share. Very capable management. So I'm thinking that this might be a great deal because I'm going to get about 8% of my money. So I'm going to go ahead and buy maybe like 100,000 on this deal. Just because I feel like it potentially has potential to grow over the long term. And I feel like it just gives me a nice coupon. And so it would be a pretty nice long-term bond to buy up. So we're going to buy up about 130 of these. And that's going to cost me $100,072. Alright. So now that we have a bunch of bonds, so now we're quite balanced right now. I'm betting that interest rates are going to fall with the convertible. But then again, I also want to take advantage of capital appreciation off the convertible. And we also have some cash and cash equivalents. And when interest rates continue to go up, I'm going to go ahead and maybe try doing a bit of bond funds. Because I feel like those are very, very nice for cash flow too. Because it takes a lot of the stress out of me picking up the bonds myself. So right now, interest rates are starting to fall quite a bit. So right now, I'm going to take a bit of a risk. And we're going to go ahead and YOLO it and leverage it. Oh, I'm such a... I'm just joking around. We're going to do that though. I feel like it wouldn't be a bad idea. So I'm gonna take out 200 of these bonds. I'm gonna borrow 204,000. So that's almost all of our money. Yeah. So I feel like that's a decent idea. So if interest rates continue to ease, we might make a lot of money in this transaction. I'm playing it kind of risky though. I shouldn't have done that. But hopefully I'm right in the end. It looks like the economy is starting to kind of slow down again. It's at 2 right now. It was at 3 before. Hmm. Okay. Yeah, commodities just keep going down a bunch, aren't they? They kind of are. Some are. Like gold and oil are going down a lot lately. Sell off in the stock market. Hmm. Bit of a sell off, yeah. I'm not gonna be an idiot. I'm actually gonna take an L on these bonds. Hopefully, not a big L. A loss of 4,000, not a big deal. That's a dumb idea. I don't know why I did that. I'm trading sloppy today. I don't know what's wrong with me. I'm not doing that all that well. Okay. Thank goodness I took that loss. So it's at 6 right now. Coleman's are convertible. How are you doing? You're doing alright. So I'm just hoping that Coleman's continues to grow. So right now they made 37 cents versus 9 cents. So they made 182 million. Not a bad profit. So their company should be growing in value. And we can see that basically our interest rates are going up quite aggressively again. So that has me going up pretty well. And there's another sell-off. What the heck? But GDP is very, very, very high right now. So I'm willing to bet that inflation's coming and interest rates are going to go up. Maybe. Because like commodities are also kind of coming back a bit too. I should have done more bond layering. I'm going to start buying up more short-term bonds. Okay, tensions. Okay, so war erupts again in the Indian subcontinent. Tensions increased in the latest Indian-Pakistani war as Indian tanks and troops broke out and capped Pakistani lines in Kashmir and rolled into Pakistan, moving direction into Islamabad, I think. The war between the two regional powers was not yet escalated into a full nuclear weapons, but Pakistan would threaten to obliterate India if Indian forces didn't halt their advance into Pakistan immediately. Global stock market tumbled on the news, but shares of aerospace defense firms were strong as orders for aircraft missiles and military equipment was expected to rise. So that made interest rates go up because I'm guessing more people were afraid of a downturn and everything. So right now, I'm pretty glad I took my profits on those government bonds that we bought because right now it is bond buying season. And Coleman's is doing pretty well, 63 cents versus 9 cents of last year. So they made 315 million. So I'm pretty glad I bought this convertible bond. If they continue to have great operational profits, that's great. But they're actually shrinking their sales. So they're actually selling off some assets. But they do have good operating margins. Sorry if you can hear my dogs in the background. So right now, it's bond buying season. So right now, we have about 215,000. Do we have any bonds coming due? We have a 2040. Oh, I should have sold these long-term bonds, especially this one. I don't know why I didn't. I should have. I should have also not bought the Coleman's bond, but it's okay. We're in it for the long term. Okay, so now I'm craving for some good old bonds right now. So we're gonna go ahead and put 100,000 into a very, very long duration bond. So let's go and do database search. Has bonds. So now we're gonna start eating them up like crazy. So that's a C bond. I want to look for a triple B. Triple B. So right now it's 2039. And we're looking for a very, very long duration. So JetBlue Airway would be a pretty decent bond. It's paying us 12%. So if we do the roll 72 divided by 12.48, we'll double our money approximately every 6 years. That's pretty exceptional. 2048. 2048. Can we best 2048, 2042? Okay. So I think Jet Airliner wins. Where are you? JetBlue Airway. So we're gonna go and buy up some of these bonds, and then we're gonna receive some coupons. And then what we're gonna do with those coupons is we're gonna reinvest them into more bonds. So we can see that we have a $100,000 budget for this bond, and we divide it by the ask of 732. So we're gonna buy about 137 bonds. That'll cost us 100,000 and 400, and then I'll have the other 100K towards buying up more bonds. But every 1%, I'm gonna buy in maybe $25,000 increments. That way, I spread across my bond. I spread around my interest basically. So right now we have a bunch of bonds. Sadly, I kind of wish I didn't buy that $100,000 Coleman's bond. I kind of wish I sold my my long-term bonds whenever rates were low. But I got very, very greedy because I knew, hey, right here, this is a very, very low interest rate. I didn't sell my bonds, sadly, there. So I made a bit of a mistake. And then I also saw right here that there was a bit of a sell-off, so I decided to be greedy and buy a long-term bond, betting that interest rates were going to continue to fall. But then I'm glad I took my profits because I would have got destroyed. But right now, we got a very, very good return on investment right now. So I'm going to continually buy up bonds at this rate, and then over the long term, we should be doing good. And hopefully our Coleman's bond is a very, very quality-based bond, and they're going to continue to grow their company. So they made $1 so far this year, and they've got upgrade from triple B to A, so that's pretty great. 70 cents is expected. So what I'm hoping is next year they're going to do a lot better, and they'll be able to grow their value, and I'll be able to make a lot of money. JetBlue, the bond we bought, the company's doing pretty great. $3.17, $3.1 billion in earnings. So right now I'm going to go ahead and start buying up some bonds again, but in $25,000 increments. Triple B, I'm looking for a very, very long duration. 2048. We already have this bond, so like I'm probably not going to be interested in buying up more of it. Dutch Capital doesn't look like a bad idea. I'm looking for a very, very long date. 2043 is the longest I could find besides 2048, which we already own. 2037, 2040, 2042. Okay, Dutch Capital is the winner. So it's going to pay us 12%, so that's pretty great. So we're going to go ahead and buy up 25,000. And then after that, I'll show you guys how much money I make every year. That way I'm going to be able to go ahead and continue. So $60 per bond. So that would be about 416. So let's do 417. Go a bit above budget. So that'll cost us 250,000. Oh, I forgot to do 600. That was my bad. 25,000 divided by 646 of these. There we go. That sounds a lot more right. So we'll buy up 42. 20,200. Good. So we can see right now that we have $90,000 in cash, a ton of long bonds. And I'm thinking about maybe buying up some ETFs just for a little bit more passive management if interest rates continue going up. Okay, interest rates just tanked like lightning quick. I'm pretty glad I put a lot of my money in bonds, but I wasn't expecting interest rates to tank that fast. Oh my goodness. Okay, so like there's a giant spread between the long and the short bond. Because look over here, it's a 10, and This is at 6. So let's go ahead and put $90,000 into a very, very long term bond. And let's just hope that interest rates continue to fall. So we're going to buy up 117. 89,000. Or borrow $601. It's not a big deal. So that big tank in short interest kind of scared me. So you can see right here that the long bond hasn't been affected yet. So I'm hoping that that short bond decrease was actually a potential catalyst for decreased interest rates, or it might have just been a bit of an error. Hopefully, interest rates continue to fall. Worst case scenario, they don't. Here's our cash flow. We're making about 25,000, 7,000. So off of all of our investments after tax, we have about 18,000. It'll be 31,000, but we actually have to pay a bit of tax, sadly. So we're gonna be at 18,000 for the end of the year, which is all right. We're gonna be able to continue growing up our wealth. And interest rates on the short bond just do not want to move. Why are they staying? Oh, they're kind of staying flat. It's weird. Like, the long bond's moving, the short bond's not moving. I've never seen this before. So you can see right now that the interest rates, they're tightening, but the short bond is just being dumb. I don't know why it did that. Did I break the game? No, I don't think I did. Okay, I think things are good. I find it weird that, like, the short bond's not moving. Oh, there we go. Oh my good. Why did I make that mistake? I wasn't expecting to go up that quick. Oh, that's kind of silly. That's alright, I guess. Oh, our Dutch bond isn't doing that well. The company, at least. Okay, now the interest rates are starting to kind of soften up a bit. But we don't have a lot of cash on us anymore. Okay, so what we're going to do is we're going to take out something risky. Last season, I did a lot of risk. So this season, I feel like we're going to up their risk. I'm going to borrow lots of money. $370,000. Let's go ahead and see if this deal works. So what we did is we borrowed a lot of money on the government long bond. Because I did this a lot last season. I used a lot of leverage in order to buy bonds. And I timed it perfectly and did very well. But I may go bankrupt really fast if interest rates continue to go up. But if they fall fast, I can make a lot of bank. So I think it's a good idea to do that. Because this is a game. So what are they thinking? Interest rates, they're easing. So that makes me feel a lot more comfortable that interest rates are likely to continue falling. Coleman's 57 cents versus 43 of last year. They're doing pretty well this year. So how's our Coleman's bond doing? We made negative 10,000 off of it so far. But if interest rates continue to ease, that should bring up the price of the bond. And we should be able to make good money off of it. Hopefully over the long term, though, they're going to be able to grow. So now we're at $500,000 in cash. Pretty great. Continue our leveraged bond that we bought. So here's my chart. I kind of grew my wealth by like a lot because I leveraged a lot of the bond. Like right now we're at 86,000 in profit. Pretty exceptional. I'm hoping to maybe use a little bit more leverage in this episode in order to hopefully bring up my gangs. That way I'm able to continue to grow up my wealth a lot faster. Because sometimes in this series it takes a while for me to grow my wealth in this game. Especially when you're doing bonds. I could just do growth stocks and easily do very, very well. Market plunges as overconfident investors after a long steady rise. So the market is continually going down. Okay, I'm thinking about taking my profits. Coleman's matched last year's earnings, 214 million in profit. Operating profit at least. Okay, so now interest rates are at 3%. So right now would be a good time to take my profits and run. So what we're going to do is just the same, just that thing. So right now we have that leverage bond was 10 times worth it. We made 200,000 off that leverage bond. So like that was a very, very high risk transaction, but I'm going to go ahead and cover my profits. So we have 352. They're selling for $163 each. We made about 500,000. And that we made about 500,000. We sell yes. And we made about a gain of $201,000 off that transaction. Pretty great. And now we pay off the debt at $371,000. Repay margin loan, $376,000. We paid it back. So right now at the moment we're at $215,000 in cash. A bunch of other bonds. So if interest rates continue to ease, we're gonna make a lot of money on that bond. So we have our JetBlue bond, $40,000. Our Coleman's bond is doing okay, so that's pretty great. So I'm hoping is that interest rates continue maybe to ease. They may not. Okay, 4% is going to be my cutoff. If it goes above 4, I'm basically going to take my profits. A lot of the times it helps in this game to make a cutoff range. Okay, 3%. That's pretty great. So now we're at 3.7. 3.01. 3.6. Go down one more time, please. 3.3%. There we go. We're good. 2%. So we're going to go ahead and take up some profits. So our government short bonds that we bought, we're going to go ahead and take them. Take the profit. Oh, I do not want to sell Dutch short. I meant to actually sell the bond. Oh, we don't even long. I bought short. My bad. 117 at 125 each. 147,000. We made about a $55,000 gain. Pretty great. So right now we have about 326,000. Still a bunch of bonds. So I'm going to continue taking my profits. Okay, now will be a good time to take a lot more profit. JetBlue, go ahead and take our profit. We made a decent return off the JetBlue bond, thankfully. So the JetBlue bond, 137. Okay. We'll wait a bit. It's okay. Probably bond prices are going to continue to go up. Hopefully. Yeah, so I'm good now. That should be plenty of time for it to kick in. We're not going to buy it. We're going to sell yet. Sell for yeah, so bond prices just went up a whole $8. It went from 102 to 110. $48,000 in gains. Pretty great. So now we're at 480,000 in cash. So now we're just going to sell all of our bonds. Even the Coleman, sadly. I knew I had potential, but you've just been kind of boring lately. You haven't done much. Okay. Why is this insured? Oh, because I bought near par. That makes sense. I'm like, why is this bond not return me as much as I expect? It's because I didn't buy it for a big discount. So I'm probably going to keep Summit Equity, etc. Okay, got rid of all of our bonds. We should have did that last cycle, but we didn't. Now we're at about almost $700,000 in cash. We have to pay a lot of taxes though, so we have to pay about maybe $50,000 in tax. So that's not really a big great deal. but we're basically going to be saying over the long term that interest rates are going to go up. Okay. So right now, interest rates are as low as they can be. They can go much lower. Part of me doesn't want to be greedy though. So we're going to go ahead and try out our strategy of shorten ETFs. So we're going to do that right now. Fund investment strategy. We're going to do the prudent government securities. So we can see right now that they're at $73 a share. So they're up pretty high. And I think potentially interest rates are going to go up again and hurt the value of this ETF. And we're going to be able to make a profit off of it. So we're going to go ahead and sell our short. So we have about... we just paid our tax, I believe. So I'm going to put about half my money into that short. So 664,336 divided by 2. $300,000 in shorts. So we're going to go ahead and sell our short. So we're going to sell 332,000 divided by the ask of 73.68. 4,500 short. Let's just do 5,000 shares. So we're going to do a little bit above budget, but I believe that this stock can go down in price a lot. So we went and did that. We're short 368,000. So like 30,000 above my budget, but it's not that big of a deal because we still have a lot of cash. And right now we're going to be betting that interest rates go up over the long term, and we're going to be able to sell this bond. Basically, we're going to be able to sell it for a big profit because we're betting it's going to go down in price. So what's our cost basis? Our cost basis is $73. That's good to keep in mind. Interest rates are now 3%. Cool. 67, 66, 64. So right now yields, yeah, they're starting to go up very fast. So I'm very thankful that I got rid of most of my bonds besides these two. And so now we're at 707,000. Pretty great. Okay, we have 20 years left until we retire. So I'm hoping is by then I'll be able to have like a lot of money. At least have over 20 million. That'll be great. And right now GDP is going crazy. It's at 5% right now. And commodities are doing pretty well. So part of me is thinking that we're pretty likely for a catalyst that potentially interest rates are going to continue going up. Plus, I shorted the bond around 2%, so like that's pretty low interest. So I'm pretty happy with that. What's the government's policy? They're neutral, so they have no clue on whether or not rates are going to go up or down. So we're going to continue our short. As of right now, it's 2033. Massive sell-off in the stock market. Pretty big sell-off, like almost 2,000. 5% now. Pretty great. Oh, 4.5. GDP is starting to slow down. Almost 5% on the bond. Awesome. Yeah, GDP is starting to slow down quite a bit, but still positive. It's pretty great. Please go to 8. That way I can start making some investments. So right now they're at 7, which I usually consider making my investments. We're charged. Okay, so now we're going to start making investments, because if you look at the short bond went up quite aggressively lately, but now it's starting to flatten out, which has me a little bit worried that interest rates are pretty likely to fall. So at the moment now, we're going to cover our short. cover it now. So we go ahead and we're gonna buy back. It's a strong sell at the moment, so a lot of people do not like it. So right now we made a decent profit. We made about 73.61 subtracted by 51.50. We got $22 a share. Divide by 73.61. About a 30% return this time. So 13 above last time. Pretty great. Oh, I did not want to cancel. I want to buy back. Cancel out the short. And there we go. We closed out at a capital gain of 110,000. So that's a very, very good part of my strategy. So now we're at 110,000. Pretty great. So now I'm going to start buying up bonds because I feel like interest rates are quite high right now. They could go higher, but I have no clue. So right now we're going to start buying up some bonds. I'm going to buy up 200,000, just very, very long duration bonds right now. So right now it's 2033. We're looking for a very, very long duration. So 2043 right here, GIAC Computers, I believe that's how you pronounce it. 2044, 2048. We just sold out of that bond a while back. So I'm going to pay a slight premium with that bond. But it is a 2048, which is pretty great. 2047, JetBlue. So JetBlue is now selling for a discount, and it's about 11% for 2047. And we also got this airline too. So like, that's pretty great. I usually don't like investing in airlines in general, but like I'm pretty interested in these bonds. So when I go ahead and start getting into the bond market and start investing in corporates, I usually get started with corporates, and then later on I start doing government. So I'm gonna do 100,000 at a price of $800 each, 125 bonds, and it'll be 100,000. So now we're at 120,000 in corporates, and we're gonna go and buy up another long duration for 100,000. So where's another long duration of 2043? That's semi-long. I would like to buy like a 2050 one if possible. Are there any? 2057 SoftBank, 9%. That's a very, very long duration bond. It's very, very investment grade. So let's go and buy up some of those, because like this is the longest duration I could find. So let's go ahead and do 200,000 SoftBank. Yeah, I'm gonna chill out on the bonds for a bit. Hopefully interest rates continue to rise, and we'll use our cash towards specifically buying up more. So 273, round up by a bunch, and 200,400. Not bad. So we have about $400,000 in cash, 328,000 in bonds. So hopefully interest rates continue to go up aggressively. It's pretty unlikely they won't, but they might. Okay, so now we're going to do another 100,000 because right now interest rates are quite high. Maybe we'll be a little bit greedy and wait for them to go up a little bit higher. Nope, don't want to be greedy. Where's another long duration? 2051 from Verizon at 11%. 2055, that's the highest. So I think that's a very good deal. 2055, yep. Does Walmart pay a higher coupon? No, they don't. Smith. Oh yeah, Smith, yeah. 200,000. I'm gonna go above $100,000 budget. Worst case scenario, we'll throw our cash flow back into more bonds. So 271. By about 200,500. Not bad. So now we have 200,000. So I'll use that just in case if rates go up a lot higher. Banks continue to tighten lines, so that will mean that like basically the supply of credit will be lowering. What are the government thinking? They're thinking tightening, so they're pretty likely to continue raising up rates. And so we're going to be able to lock in a very, very good rate, hopefully. Permanent government securities is at $45 right now. Okay, if it falls below 9, we're gonna go ahead and lock in. All in. Jeffrey Pilot Insurance is insolvent. It has been taken over and reorganized by regulators. Company is basically forced to intervene. So basically the government took it over. So that's pretty likely to make interest rates fall. No? Okay. How much money are we making a year now? $53,000, $2,000 in cash. So right now we're making about so we should be getting, how much, where are we getting all this money from? Oh, okay, so that's our previous cash balance. So yeah, I'm gonna put $32K into some bonds, hopefully. Okay, let's go ahead and put 30,000 into another bond. A very, very long duration, hopefully, triple B, 2048. This one's actually at a discount for once, so it's actually paying a lot more higher than it used to. Acrocomber, Micron Technologies is paying me 12, and it's for 2051, so that's a reasonable years out. So we're gonna invest a full years of bond interest in this company. After tax, so it'll be about 35,000. I think it's 33,000. I'll go a little bit above. So it'll be 6, 7, 5. So we're gonna buy about 52 of these bonds. And right now, 35K. There we go. We got that done. So right now we're at 5. We're very, very invested in very, very long-term securities right now. But interest rates continue to fall. If I was really bullish that interest rates were gonna fall in this game, I could hypothetically look at the where is it? If you're very bullish that interest rates are going to fall, you could theoretically buy a call in this company, and then when you buy a call, you could just have it for a few months out, and then that way you're able to take advantage of. Basically, if it does fall, if interest rates do fall, this company's going to report more earnings, and then they're going to be able to basically go up in price. And I'll also do that for banks, too, in this game. If you think interest rates are going to fall in this game, buy banks and insurance companies in this game. Like the stocks. Contrarian investors say high grain prices are almost over. Oh my goodness, look at the spot price of wheat. It's at almost $10. And then corn, it's almost at It's at $6.15. Okay, I'm gonna go ahead and lock in all into long-term bonds. So we're gonna do 223,000 into a very, very long duration bond, because part of me is thinking that interest rates are gonna fall and we're gonna go through another economic cycle. But worst case scenario, I lock in at higher rates. So let's do a very, very, very long duration bond. 2051, 2052, 2055. I don't think we own that bond, so that'd be a pretty good one to own. 2055, Kohl's Corporation, 11. So it's paying similarly. 2056, 11. Aflac, 2053, 2056, AXA Group. What about the triple Bs? Are there any triple Bs out there that are for a very, very long time? Not really. There's a big, big jump between the prices, like the yields, I mean. 2048, that's reasonable. Nah, okay. So I'm gonna buy up this company because they have a very, very good bond. 2056. So 223. My bad, I got rid of it. Divided by price of 649. So that'll be about 343.43. Now it costs us 222,600. We'll have to borrow 3K, sadly, not a big deal. So right now we have $0 in cash, $700,000 in very, very long corporate bonds, and we have some margin debt. So right now we're betting that interest rates are going to fall. Worst case scenario, interest rates go up. Our bond portfolio will get hurt. Well, it's not really the end of the world because I'm long term. I'm going to hold these bonds into maturity. Worst case scenario. But look over here. We're making $82,000 a year in income. After tax, $48,000. So that $48,000 will be used towards specifically buying up more bonds, maybe a higher coupons. Or just building up our liquidity. So I'm going to use that cash flow towards specifically buying up bond ETFs from now on. So I'm going to constantly be watching my cash. 0. Oh, interest rates are falling quite heavy right now. So that has me a little bit concerned because I might want to take out some leverage. But they may chill around this rate for a while. So I'm probably not going to take out any. Plus they just rebounded. At least a little bit. $8,000. So we're going to start buying up some ETFs for bonds. So we're going to start buying up the government bond one. So we have about $8,000 in cash. Divided by the ask. So what I usually do in this game is I hit the buy. And you can see right here the ask is $50.64. So we just divide that 50.64. We're about 158 shares. 8,000. Oh, we don't have to borrow. So now we have a little bit more of a stock portfolio now, but we have a government securities ETF. So they're gonna pay us 6.3%. My objective is to keep this ETF for the long term and just keep it, and maybe sell some covered calls on it if I think interest rates are gonna fall, and if I think it's gonna. And if I think it's gonna fall in price, I'll sell some covered calls on it, and I'll continuously be buying more and more of it. So I'm gonna probably allow options in this series, and I'll just that way I have a bit of a safety net when it comes to my shorts. We can make good money, basically selling covered calls on this ETF whenever we think it's gonna fall in price. So I have plans on also buying up the corporate bond ETF. So I'm going to start buying up more ETFs in this episode. But we also have a ton of our own money. So right here we have a default. Venezuela default on the sovereign debt. Rattles financial markets. Announced today no to default on sovereign debts. News of the default shook global financial markets. Officials at Venezuela's central bank blame the default on low export for oil. It's at $78 and high interest rates. So right here we can see that interest rates are pretty likely to sell off. So where are they thinking? Neutral. It's alright. If interest rates continue to fall, we're going to make a lot of money. If they continue to rise, we're still going to make money. So now we're receiving dividends from our government bond ETF of $126. Woohoo. Pretty great. So right now we have about 4,000. Let's go ahead and might as well cover my debt. Then again, it also doesn't really matter. Let's go ahead and cover it. There we go. We are debt free now. Great. Okay, now GDP is now kind of in the negative territory, 0.4. So it's pretty likely that interest rates are going to continue to ease over the long period. So I'm just going to continually be reinvested. Okay, we're gonna go ahead and buy a bunch of corporate bonds. I'm gonna buy about 300. 50% of our leverage. So we're gonna buy 300,000. So right now we took out quite a bit of a risky position because I'm betting that interest rates are gonna continue to fall. And they kind of are, so that's pretty great. Hopefully they continue to fall down. Millionaire Club, great. 6.6%. Keep falling, please and thank you. Five. How much have we made out that bond so far? The leverage bond that we took out, $42,000 in profit. We didn't take out too much leverage though. We only took out like $300,000 in loans, so we still have about $1 million in net worth. So like we're doing all right. So my main objective is right now is going to be continually have our bond portfolio, basically, which is invest in very, very long-term bonds, continue to do well. Hopefully, if interest rates continue to go down. And we're making a lot of cash flow right now. We're making about $64,000 after tax. Well, after our current taxes, but $64,000 after paying tax. So we're doing all right. So my main objective right now is going to be that interest rates are going to continue to fall. We're going to be continually able to sell our bonds for more. So now we're in the Millionaire Club, so we're doing pretty well. And interest rates are starting to go up, which has me, a little bit worried. So, we only made 20,000 now. Ooh, that sucks. I want to low-key be greedy and bet that interest rates are going to continue to fall, but this short-term uptake is making me a little bit nervous. So we're going to go ahead and take our profits. Sell the long-term bond, 133. We make, we made a capital gain of 12,000. Not that exceptional. But we're going to be able to pay off our loan and take maybe a few $1,000s for profit. So now we have about almost $50,000 in cash, $940,000 in long-term bonds, which are worth a lot because like we made a decent profit. So Smith Food and Drug is doing okay, but we're gonna continue buying up bonds. Right now GDP is negative, so I have a potential catalyst in the future that interest rates may fall, but then again they're also going back up. So I'm pretty glad I covered my bond. 6.5%. Okay. 5%, 6. Oh, interest rates are actually kind of staying normal for a while. They've been in the mid-range for quite a while. They're not in the low range when I consider selling, and they're not in the high range when I consider buying. So right now we're just going to keep some cash and maybe do some bond laddering. But I feel like cash will probably be a better option because if interest rates decide to go up a lot overnight, I'll be able to buy a bit of their bonds. We're at 5.8. Yeah, right now GDP is barely staying alive, and materials are just getting crushed right now. Like right now would be a good opportunity for me to buy up gold, but I can't because I'm doing bonds only. $5.88, 6%, went up a lot. I should have maybe sold my bonds over there, but then again, it's okay. I'm gonna do it right. Okay, we're now at 57,000 in cash. 8,000. Oh, that's our stocks. My bad. I thought that was like T-bills for a second, but I don't think there are T-bills in this game. T-bills being treasury bills. Getting pretty bright. Okay. Still receiving dividends from our company, which is great. How much is our average cost basis? $50. Not bad. So I'm thinking about buying up more ETFs. So we're gonna start doing that. So I have right now about $61,000 in cash. So right now I'm gonna consider buying up some corporate bond ETFs. So fund investment strategy. We're gonna start buying up the blue chip fixed income fund. And so this fund basically is trading in the investment company. So they're quite heavily invested right now. What are they doing for cash flow? Free cash flow of $2 billion. Not bad. So let's go ahead and buy up some of this, because I feel like this is a pretty quality ETF. And that way I don't have to focus too much of my time on managing my own bond portfolio. I'll have other people manage it for me. A little bit at least. So I'm going to buy up 913 shares of this fund. And then we're going to continuously be buying up more and more of these stocks. Just because I want more of an exposure to other things than my own bond portfolio. I want more diversification. So we're going to start doing some bond ETFs this episode. So this ETF, the blue chip fixed income, is going to pay us about a 7.8% dividend yield. So we're going to be able to, basically we're putting our cash to work in ETFs now. So right now, the second I buy a bunch of bond ETFs, bond prices, bond yields go up and bond prices go down. Yay. Yeah, so now they're going up quite aggressively. So right now is investment time. But we don't have a lot of cash, sadly. We only have 9,000. It's not a big deal. So I'm going to start aggressively buying up ETFs now, because we already have a lot of corporate bonds right now. So right now I feel like the ETF, the prudent government securities, might be a great buy. It's gotten hurt. Yeah, the prudent government securities has gotten hurt a lot. Okay, so now we're gonna go ahead. Should I do my own bonds or should I do ETFs? It's a bit of a hard question. Right now, I feel like prudent government securities is potentially a great deal. The yield is 8.4%, and so is the blue chip fixed income. But I could theoretically make a little bit more than that by buying my own bonds. So I'm gonna do my own bonds from now on. Bit of a hypocrite. Okay, so like 14% right here. So we're gonna go and buy up a very, very, very long duration bond, as long as we can find. 2053 is pretty good. Great Wall Tech. 14% return. Jeez, that's crazy. So right now we have about 23,000 in cash. Buy GWAO, and this is for about 837. I'm gonna buy about 28 of them for 23,500. We're gonna borrow $900. Not a big deal. So now we have a bunch of long bonds and a bit of ETFs. I wanna, after this cycle and interest rates start going down, I'm gonna go ahead and start doing more ETFs, because I feel like that'll be great. We have almost no debt, which is great. I'm thinking about buying the government securities ETF or the blue chip fixed income one. Right now, interest rates are at around 11%, and if I could buy corporates, they're pretty great right now. So sadly, right now, I'm pretty sad I didn't cover my bonds around here because I would have made a decent profit. But I didn't know whether or not interest rates were going to go down or up, and now they're actually at very, very high levels. So right now is usually when I usually like to have a lot of cash, but I don't. So you can see I've lost a lot of money on my Smith bond, etc. But we also have a bunch of other very, very long duration bonds we just bought up recently. So we can continually reinvest our $55,000 a year after tax cash flow towards buying up very, very long duration bonds. That way we're going to be able to grow up our wealth pretty fast. So right now, very, very good opportunity, 12% interest rates. They might go up to 20. If they go up to 20, I actually am planning on borrowing a lot of money. And then we're going to go ahead and bet that interest rates are going to fall over the long term. But you can see that our chart, we're actually not doing that well. Like my investment chart, we were about a millionaire, and I bought up a lot of long duration bonds, and then now interest rates have fallen. They've actually risen, so that's hurting the value of my bonds that we hold. So now we're actually at like 750k, about 600k, my bad. But right now it's a very, very good opportunity to start eating up some long bonds. So we have about 10,000. Might as well pay off our debt. And these ETFs are pretty great too, not gonna lie. Oh, okay. So, like, this is a weird event I think I've never seen. Strange object in northeast skies, results in blinding thousands of Seattle area residents. Medical authorities in Seattle cautioned residents to remain in their homes and offices until the current unusual weather conditions return to normal. Hospitals report that thousands of residents were blinded when they were in the area about conditions, with no rain being reported in the area for 3 full days. A government meteorologist explained that it is not terribly unusual for the rain to halt briefly in the Seattle area. The 3-day drought was accompanied by rare clearing of the cloud layer. Tens of thousands of local residents, mystified by what they describe as a large, round, brightly glowing object in the sky, were initially in the state of near panic until an official advisory was broadcast on an emergency basis, informing the public that the bright object was not a UFO, but merely the sun. The large recorded sunshine in Seattle was some of 20 years earlier. So many gray. Forgot what the sun looks like. Several heart attacks were reported among other older citizens who either thought the large glowing object was a UFO or remembering the object was actually the sun, became so excited by the rare sight that their hearts failed. Damn. Many areas citizens lapsed in trauma-like conditions and stared directly at the sun until they became blinded. Public health officials estimate the number of persons who were blinded by the bright rays of sun, which was not shielded by the usual, to be near 25,000. Most of those who lost their eyesight, sadly, were young people at the age of 20, many of whom were born after the date of the recorded sunshine in Seattle in September 2015. Many of those young people had been born outside of the Northwest, had never seen sun before, and thus had no idea what the glowing object was. Rain is expected to resume tomorrow, and weather forecasters do not expect reoccurrence in the calendar. Public health officials and members of the city council have recommended that schools institute a sun blindness safety program. Okay, so that's very, very relevant information. Interest rates fell quite a lot, so we're going to go ahead and maybe leverage our bond. Yeah. So right now we're going to take a lot of risk, and we're going to go ahead and leverage a bond. Right now we're going to leverage a lot of the government bond. We're going to borrow all the money we have, basically, which is kind of stupid. But with interest rates being so high, I'm thinking it's pretty likely that interest rates are going to fall a lot. If they don't, we're in a lot of trouble. They're easing, so that makes me feel a lot more comfortable. So right now, our trade, we have about $600,000 in government bonds, $600,000 in cash. So we borrowed about half of our money. We're now triple B from the credit ratings. And we're paid about 15% on our $600,000 balance. So that's a bit of a problem. But I'm hoping is that interest rates continue to go down a lot. That way we're able to make a giant capital gain on that bond. And they are easing. So that makes me feel pretty great that interest rates are going to continue to ease. We're going to make a bit of money. So right now our bond portfolio is going to excel in a lower interest rate environment. So we have a government long bond. And we have a bunch of other bonds that we bought sadly at lower rates. So it's going to take a bit of time before we hit profit town. But our government bond is doing pretty exceptional right now. Whew. Okay, it looks like they're starting to hit like the support line before. So part of me is thinking that it's probably a good idea to maybe take my profits. But then again, we're also in an easing environment. So part of me is thinking that interest rates are probably going to go below normal. Right now might be a good time to take profits though. Like we're actually at like a pretty decently low environment for interest rates. But like I would consider it medium right now. I'm thinking they might go into low interest rates territory. So I'm going to be a little bit greedy. Okay, where are they thinking now? Still easing. What are they thinking? So the computer industry has a good... analysts predict that oil prices and interest rates will fall from present levels. So they're betting that oil prices and interest rates are going to fall. Sometimes analysts can be wrong though. But look how much money we made. We made about, oh my goodness. We were like around 600,000. Now we're 1.6 million right now. We grew our wealth very fast. Okay. So right now it's about time I go ahead and consider taking my profit from those bonds. Especially the leverage. So we have a leverage bond. We need about 500,000. So if you actually want to do a quick percentage math, 156.88 subtracted by 84.77, $72 in gains, divided by 84.77, which is our price that we paid for. We made about 85% return. Times that by 100 and you get a clearer picture. 85% return on our bond portfolio. That's pretty great. So I'm going to go ahead and take my profits on the long-term bond that we leveraged. So right here, you're selling $750,000 at face value, 10.5% bonds, less a $50 commission for a price of 1.166 million, 300,000. No, 1,166,396.50. And we got to keep a capital gain of 534,000 from leveraging our money. But if interest rates went up, we would have been in a lot of trouble. But I'm pretty glad I did that. So now we're at 1.2 million, and we still have a lot of corporate bonds that are intended on dumping. So Intel Inc. Inco Inc. I mean, we made a decent return on that. Give me 1 second. How do I mute? Oh, okay. So I'm gonna be a little bit more quiet because it's like late night. So we're gonna go to sell N. Take our $100,000 in gains. So we can see right here that we made about a capital gain of 114,436. Pretty great. So now we're at $1.15 million in cash. But we still gotta cover our bank loan. Cover a bank loan. So now we're at $900,000 in cash. And if interest rates continue to ease, I'm going to go ahead and continue and sell my things. What the heck? Oh, what? Oh, I'm live right now. What's up? Oh, I'm back, yeah. Oh, okay. 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 Love you too. Bye. Sorry about that. Okay. So right now we're at $929,000 in cash, $800,000 in corporate bonds, so we're doing pretty well. So right now I'm going to go ahead and sell all my bonds because interest rates are as low as they can be. So now it's about time I go ahead and explain a bit of my covered short. I'm still going to short, but I'm also going to do some covered shorts for extra profit potential. So right now we have a bunch of money. We made a decent profit off those. But right now we're going to go ahead and get all of these bonds all together. Take home some big gains. Sell the Smith bond for a $100,000 gain. We made about $103,000. Pretty great. $500,000 still in bonds. Let's sell the SoftBank bond that we bought. $301. 93,000 gain. 241,000. These bonds are pretty great, but like this bond, JetBlue, might be worth selling because it's a pretty decent amount of money invested in that bond. So right here, it's like I'm trying to look for over here, like not over here. You can see, for example, $10,000, $1,000 in gains, $14,000, $2,000. But like for example, Micron, I'd also sell because I have a lot of money in that. I have like $50,000. So now I'm going to keep the rest of these. Like 30,000 is quite a bit, but it's not all that much. So right now we're doing all that well. So right now I feel like interest rates are as low as they can be. They could be lower, but I don't know. Okay, we're going to go ahead and do our shorts now. So we can see right here our bonds. Prudent government securities is now at $75, so we made a good amount of money on this bond. I'd say about a 25% return. So 75.74 subtracted by 50.70, 25 divided by 50 dots. Yeah, I messed it up. 75.74 subtract by 50.70 divided by 49, almost 50. And this bond I'm not going to calculate, so it doesn't matter. So I'm just going to show you guys the covered short. So I'm going to write this down. So we have about so prudent. So for the prudence government securities, we have about 158 shares. So we can sell one contract. And then we're basically also going to do the blue chip. And we have about 913. So we can sell about 9 contracts. You might be asking, like, what the heck am I talking about? Today what we're going to be doing is I'm going to be trying to do something called a covered call. Or basically what you're doing with the covered call, you're basically writing calls that you already own. So with this companies, I own these stocks. So the great thing is I already own them, so I actually have a lot less risk. Whereas if I was selling them naked, I actually don't own the stocks and I could potentially lose unlimited amounts. But with a covered call, the worst I can lose is these 2 stocks I own. So that's pretty decent. So we're basically going to be benefiting from a drop in price of these companies. So I'm gonna go ahead and actually do it. So I actually wrote it down. Basically, one contract equals 100 shares. So hence why I say one contract, like, because 900 is 9 contracts, 158 shares is one contract. So like this is what we're gonna be doing. We're gonna be selling a call on these companies. So we go ahead and just double click on this company. Let's start from the top. Click on that. Trade. Trade GBND options. And we're gonna sell a call. Okay. We're gonna sell it at $77. We could theoretically sell it at 97, and that way it's deep out of the money, but we won't receive as much premium. But then again, it might make a lot of sense. And so we're gonna sell it out. We're gonna sell it for like $5.60 per contract, and you may sell up to 489 calls. So I could theoretically take out a lot of leverage in this game just by doing call options. So like you can make a lot of money in this game off call options, but I'm gonna take my low risk. So 482 contracts is the maximum. That's 100 shares each. You can take out 42,000 shares at $97 each. I can take about $4 million worth of leverage on this contract. No, thank you. All we're gonna do is we're gonna sell one contract. Sounds boring. Yeah. We're gonna sell, and we're gonna receive $500 from this. Cool. You sold one call option expiring in the mid-month of December 2037 with a strike price of $97 a share. Each option sold covers 100 units of prudent government securities. So we went ahead and received $500. In simulation, options are sold, can be bought. So they're European style, where basically you can only buy them when they expire. And then, yep. So we went ahead and did that. So right now we're betting that the price is going to fall over the long term. And so right now I'm going to do an in the money call for blue chip fixed income. So right here we got blue chip fixed income selected. Trade. Options. Sell call. And we're going to sell it for $81. That sounds like a decent amount. And see, look, now the premium is so much higher because the other option we did was deep out of the money. So, we basically made a decent amount. We locked in our profits right now. So, like, this one I'm going to go ahead and sell. I'm not too strong when it comes to options. We're going to receive $7 in premium from this contract. And then again, we can take out 462 calls. Don't want that to happen. We're going to take out 9 contracts. And we're going to receive $6,000 in premium. So there we go. We have some premium. We sold some covered calls. So right now we sold one contract for the prudent government securities. And that's what I wanted. And we're also selling 9 calls against the blue chip fixed income. So right now, the person who bought the call is hoping that the prudent government securities goes above $100, basically, which is very, very unlikely too, because we're in rock bottom low interest rates. And with the blue chip fixed income, he's hoping that it goes above $81. But I basically know that the price is going to fall a lot, potentially, because interest rates are going to go up over the long term, especially in the next 5 years, hopefully. So this is potentially a very, very good money maker for me. But like, of course, probably selling the stock would be a better option. But like, I also want to keep the shares and keep receiving these dividends of 4.6% dividend yield, 6.6%. So like, that's why I sold the calls. And so now we're going to do a short on my good old buddy, Mr. Government ETF. So now we're going to do a long-term short on the government ETF. So at the moment we have 1.8 million. So we're gonna borrow, let's just borrow about $1 million for this ETF. So we're going to go ahead and sell GNBD stock. No, I wanted to sell short, bro. Fine, I'll sell it. It's not even that big of a deal. Okay. So sadly this is now considered a naked call because I can't short because I actually own the stock. So this is a naked call. So my main objective is hopefully interest rates go up over the long term, and we're gonna be able to buy in, and therefore making it a naked call. So what we do is we just need 158 shares. So I'm gonna probably buy a lot of shares over the long term. So we're gonna continue with that short. Sell the stock, sell it short. Are you sure you want to sell it? Yeah, I'm okay with that. Losses are unlimited. Strong buy right now. A bunch of people like it. $900 divided by 75.32. I'm gonna sell short about 12,400 and 12,500. So 12,500 shares, 940,000, pretty close to a million. So right now we're betting that prudent government securities falls below $75 a share. So let's just hope that this works. Sadly, we sold a naked call against prudent because I couldn't just sell short. I had to sell my stock in that company. So this option we have right here for 100 shares is naked. But it's pretty unlikely over the next 5 years that the stock will be move. It will likely be a lot lower. And plus, I'm going to buy some more whenever the prices go down. So I'm in a decent condition right now. And I'm betting that interest rates are going to go up over the long term. Prudent government securities is now at 76. I have to pay some dividends, sadly. It's not a big deal. We still have a lot of cash right now, which is great. Let's just hope that interest rates go up. Therefore, this thing falls in value. I could theoretically take out a lot more leverage, but just in case of the weird formality or whatever, that it goes up a little bit, I'm not going to expose myself to that risk. So we are taking out quite a bit of risk, but like we're 50% leveraged. So the stock would have to tank. The stock would have to go up a lot in order for us to lose a lot of money. Okay, we sold all of our bonds, almost all of them. So we still have a lot of cash that I plan on using towards investing in more bonds, hopefully whenever rates go up. So our short on the bond is doing alright. $71, 7D. Like, look how aggressive or semi-aggressive the interest rates are right now. Usually they're much more aggressive, but we're doing alright. $68. $72. Yeah, interest rates are kind of staying around the 3% range, which has me a little bit worried. But our short is still in a lot of money right now. We could theoretically sell it for a decent profit right now. We could sell it for $10,000 in profit. Oh, $996. Oh my gosh, that's a lot. But I'm going to be a little bit more greedy and continue to wait for interest rates to actually hit mid-level. And maybe consider selling my short. Or no, buying back my shares, I mean. And I borrowed. And if we look at our calls that we sold, like this one's deep out of the money now. So like there's no way the guy who bought it is going to convert, because he's like, I'm paying $97 a share for this. But he didn't pay much premium, so that's great for him. But it's highly unlikely he's going to be able to convert this. This one, it's quite in the money. Almost in the money. It's like a bit out of the money at the moment. But if interest rates continue to rise, this call option is going to make it more and more out of the money for the person who bought the call. So I'm going to be able to keep the premium and keep the stock. So yeah, that's the name of the game right now. I'm just selling it for a little bit of some extra income. Like I made $6,000 off the blue chip fixed income. I should have did this last episode, but no, like last season. But last season I counted options as cheating. But then again, I'm technically doing it through a bond ETF, so technically I'm gonna consider that allowed. It's a option of hedging with my bond portfolio. And same with shorting. Like last season, I did not short ETFs, and I'm doing a lot better in this so far, at least, shorting ETFs. Like right now, we're at 1.8 million. Like our value, we boomed a lot when we leveraged that bond. If I would have started leveraging earlier on in the series, I would have probably done a lot better. But I also don't want to take on that extra risk. So the short with the ETF is doing pretty well. Hoping that interest rates start hitting around the 8% range. That way I'm able to make up some decent investments and cover my short. 6%. Let's look at our short. We made about 188,000. We also have to subtract our dividends we paid. I don't know how much that would be, but it's probably a lot. $52 a share. Okay, right now is when I consider making investments. So right now, we're going to go ahead and cover the short. Buy back. So we're going to go buy back the securities. Strong sell. 12,500 shares. So we made a decent profit off this short. I could theoretically be greedy and keep this short open. And interest rates could theoretically go a lot higher. But it's probably better that I... try to keep my risk relatively low. So this is about a 30% return. We made about $281,000 in profit from that short sell. So I feel like that was worth it. So now we have about a lot of cash. And look at our bond ETF that we have, the Prudent Government Securities. I think it's GNB. Yep, go. Yep. So we made about $281,000 in capital gains. So I'm going to start buying up more of that ETF. Because it's a relatively cheap ETF right now. Okay, we're going to start buying it up right now. So we're going to buy up the profit we basically made. So the profit we made off the short sale was about 281 minus capital gains, keep in mind. But like right now it's at 51.88 ask. We're buying about 5,400 shares. 5416. And there we go. We have a ton of shares now. And how much is it going to pay us? About 6.9% dividend yield, which is pretty decent. Oh, no, 6.8. Pretty good. And now we are covered because I bought up like a lot of shares. So we own way more than 158 shares now, so we're considered covered. Awesome. So I basically have quite a bit in ETFs right now, which is great. And I have plans on whenever interest rates get low again, I'm gonna plan on doing some more covered calls. Because if you look over here, this covered call, it's at $97 strike price that the guy bought it for. Highly unlikely he's going to convert now because he's just going to lose a lot of money. So he's just going to let that option come to waste and he's going to lose out on his premium. And same for the blue chip fixed income. So right now it's highly considering, right now it's about time I start investing heavily in the blue chip fixed income ETF and regular bonds altogether. So right now I'm going to buy $400,000 in long bonds. Triple B, 2040. I want to see what date it is. It's 2037. So that's good to keep in mind. So right now I want to try to look for 2050 at least. So like these are pretty liquid. 2055, that seems pretty nice. 2055, that's the highest I see. $20.55, $20.57, Burlington Indu, $20.60, Lukoil. Yeah, so like this seems like a good one. Lukoil, 11% coupon. So we're gonna buy 400,000 of this bond, and it's an A, so like it makes me feel a lot more safe than buy up a triple B because it's got a little bit of better credit rating. We're gonna buy it for 673. So we're gonna buy 600 of these bonds. It's gonna be 404,000. There we go. We got 1.5 million. We got no taxes payable, so that's pretty great. So I'm gonna continuously keep buying up ETFs. And we're also gonna buy up long duration bonds too, that we were gonna be able to do really well. So now we're gonna buy up like an extra 100K, and a triple B, 2055, 2057 Toshiba. Yep, that's the longest one I can see. So Toshiba Corp Computer, 13% coupon. So we do 100,000 divided by 654. Oh, so about 153. That'll be around 100,000. So right now we still have a lot of liquidity, but we're also taking advantage just in case if interest rates do fall, and we do have a lot of ETFs. So the ETFs are going to do all right no matter what interest rate, because they're going to be able to diversify and do pretty well. So I'm going to be a big bull of continuously buying up ETFs later on this series. So I'm thinking about buying some more ETFs. I'm thinking about buying maybe 200,000 in the blue chip fixed income. So I'm gonna buy about almost 30. Let's just buy 3,000 shares. Go a little bit way above budget. So this would be about 210,000. So right now we have about 700,000. So right now we are quite heavily invested in basically the ability to make money off at lower interest rates. And I'm going to continue buying in to more government bonds with our 700,000 if interest rates continue to climb. Or if I think that interest rates are going to tank, I'll put all my money in. But right now I want to try to take advantage of buying little bits of bonds whenever interest rates go up 1%. So right now it's up 1%. We're going to buy up an extra 100,000 in a long duration triple B, 2048, 2057 Catway Life, 12.8%. And it's for 995. So we're gonna buy about 101. About 101 bonds. A little bit above, $500 above budget. It's okay. So now we have a lot of money in bonds, which is great. And you might be asking, like, how much money am I making a year? Well, we have $7,000 in cash we're receiving from our cash balance. $75,000 in corporate bonds. $37,000 in dividend income. With that all into consideration, we make now $92,000 after tax, and minus our current taxes that we owe from our coupons, we make about $80,000. Plus our current, we have about $732,000 at the end of the year expected. So we are quite liquid right now to take advantage of higher interest rates, if that is a thing. So right now, if interest rates rise just a little bit more, I'm going to increase my budget to 200,000. Right now, bonds are a super duper good deal. They're on a fire sale, as I would say. And we're receiving about 4K, about a quarter, from our government bond ETF. They borrow a bit of money. So now everybody got 200,000 in very, very long-term triple B bonds. 2041, 2048, 2061. Reliance Insurance. This seems like a very, very good one. It's the longest duration, so I'm pretty happy with that. $285, 199,000, a little bit below budget. It's okay. And look, we have about $400,000 in cash, and we're quite heavily invested right now. So we went from about, I think, 80,000 pre-tax, I don't know, after tax, to around 100,000. So right now we're doing pretty well. And hopefully interest rates continue to climb, and I'll be able to continue getting up great deals. Okay, interest rates are starting to slow down, so let's go ahead and go all in. 470,000. Let's do that in a AAA. It's very, very long duration. 2055, 2059. Yep, so we got about how many dollars in cash? We have about 474. Minus our tax, we have about 5,000 in tax. That's not a lot. So let's go and buy about 400,000. 470 divided by 527. Buy about 81891. 470,000. I'm gonna borrow 6K. Not a big deal. So there we go. We have $1.2 million in corporate bonds, a bunch of ETFs, and some options. But if you look at the options, they're way out of the money. So like, it's highly unlikely they're gonna convert. But it's also due in 2037. But we have plenty of shares that we already own in both ETFs. So these are extremely covered. Basically, we're not going to lose any money off of those. And if interest rates actually do fall, I have objectives on continuously using covered calls just to make a little bit of extra premium to reinvest into more bonds. Or I could sell them for a big profit, potentially. So right now we're betting that interest rates are going to fall, quite heavily at least. Okay, let's go ahead and leverage this position. Why not? Why not? Let's just go and take out maximum amounts of leverage. We're at 104. I'm going to take out 1,700 bonds. I borrow 1.7 million, 1.8 million, I mean. So there we go. Now we're quite heavily leveraged. So we have $3 million in total assets, $1.8 million in margin debt. We're paying about 13% of our margin debt. So now we're considered junk category, our individual character. So right now, if rates don't fall, we're in a lot of trouble. We're in a lot of trouble. Please fall. They're easing, so that makes me a little bit more comfortable. So let's just hope that they continue their policy and continue to ease, and we can make bank. So now we're in $2 million range. Pretty great. If we look at our chart, we've been doing pretty well lately. I haven't been buying a lot of the short bonds in this series lately. I've just been trying out different strategies like shorting the ETFs, selling covered calls on ETFs that I already own, receiving dividends from these companies. Pretty great. I kind of wish I did more convertible bonds, but then again, these strategies are pretty profitable, especially when you can identify trends this easily. In this game's quite easy in my opinion, because if you can read the trends, like for example, you think 8% is a very, very high rate, lock in. You think around 5 is medium and then 3 is low. It's relatively easy to spot trends in this game. Sometimes they shock you, so like that's why you don't want to take out a lot of leverage, or if you're using leverage, please use it with caution. But like right now, I made a lot of money off these bonds. Hopefully interest rates continue to ease. But they could jump tomorrow and I would basically be in quite a bit of trouble. Okay, I think interest rates are low right now, so we're going to go ahead and cover our... So like right now we made a lot of money off these ETFs. And we made a lot of money off this government bond ETF. No, this government bond that we bought, we leveraged for too, which was great. So we made about $45 in profit, 103.95. We made about 42% return off of our leveraged return. So we're gonna go ahead and just sell it, take our profits, and run. Oh, damn it, I didn't get to see the profit. I guess we'll see the capital gain. Capital gain of around 700,000. That's crazy. So right now we're at $2.6 million in cash, $1.8 million in loans. So we have to pay off those loans. Let's go and pay off those loans. Pay off the loan. And we're at $800,000 in cash, $700,000 in stock, and $2.303 million in corporate bonds. So if we look at our corporate bond portfolio, big gains, especially in Lukoil, where it's 2061, very, very long duration. And we also put a lot of our money in that stock. But if we look at this company, for example, this is a very, very big gain too, 2059. So right now it's potentially time for me to take my profits, but I might be a little bit greedy and wait for interest rates hopefully to fall a little bit lower. Nope, they're not. Not a biggie, not a big deal. We're gonna go ahead and take our profits from this company. Sell the bond. 890 of them. Sell them for 820,000. Make a profit of 340,000 off that bond sale. $1.6 million in cash. We can see right here, like this would also be a good one to sell, Lukoil. So this is some of our long duration ones. 174. It's pretty great. 2.6 million. Alliance will sell. Oh yeah, interest rates are starting to dive up a bit, which has me a little bit worried. Hence why I'm dumping out my bond portfolio right now. So we'll sell Catway Life and Toshiba, and then we're practically golden. We made 43K, not bad. And we're gonna go ahead and sell this bond, Catway Life. So 101 of them, 20,000, not a bad gain. So right now I don't care whenever rates go up or down. But if they continue to go up, it might be a good idea to go ahead and sell some covered calls on these stocks we bought. Probably not worth it actually. I'll probably just keep the stocks. We could receive a little bit of extra premium, but right now interest rates aren't too low. If they were much lower, I would sell more covered calls on them. But then again, we have potential to still make a lot of profit. Like how much is this stock? We paid 69 for it. We could potentially make a decent amount of profit if we sell these as covered calls. But I think I'm thinking if interest rates go down, then potentially we might get called away and lose our shares, and that would suck. But if interest rates continue to go up, then we're going to make a lot of money. So I might just hold off on selling covered calls. I'm going to regret though, probably later on. But we're doing alright. Look at us. We're at 3.2 million right now. And it's right now it's 2037, so it's almost 2040. I'm also not going to short the ETF because right now I feel like interest rates are medium level, so I have no clue on what's going to happen. They could go up or down. Comments say investors no end in sight to high oil, high silver. You have option expiring for blue chip fixed income. Your option is saying no. Yeah. It's deep out of the money, isn't it? For the blue chip fixed income. It's actually it's actually above the money. So we actually might get called away for 900 shares. It's not a big deal. Keep in mind we have basically we have 5,000 shares. So at most we'll lose 900 shares because it's going to be called away for more. The great thing is we got to keep our premium. So it's pretty likely he's going to call away. So we'll lose 900 shares. Not a big deal. Because it's like $8. Government has raised corporate income tax to 30% to expand vacation time for public employees. So that's going to decrease interest rates. Yup. So right now, like, I'm pretty glad I kept those ETFs because the ETFs are nice and diversified. They're making me a lot of cash flow. And the great thing is if you're not too sure on whether or not interest rates are going to go up or down, sometimes having those ETFs are great to have. So right now we're still benefiting from any interest rate environment because we have these dividend companies provide us dividends every quarter. So they're still providing me with cash flow. So like if you look over here, we're receiving $44,000 in cash, $42,000 after tax. No, $43,000. We have a lot of cash. And what I'm hoping to do is a covered call. We did not lose our shares. That's great. So we're doing alright. Or at least I don't think we lost our shares. So if interest rates fall very, very low, I'm going to do a covered call on both of these ETFs. Make a lot of premium. And then later on invest that premium into longer term duration bonds or more ETFs. And I'll be able to do pretty well. Right now it might not be a bad idea to get into a little bit of... Yeah, so I might do 400,000 in a junk bond ETF. And then I'll invest the rest in my own money into other things. So we're going to get into the high income junk bond ETF. So what I noticed with this junk bond ETF, it acts weird. Because like generally during lower interest rate environments, this ETF does a lot better because what they're buying is they're buying junk bonds, and junk bonds usually have a lot of variable debt, and generally the variable debt is a lot cheaper it's a lot cheaper on lower rate environments, and so it makes it way more affordable. And so in that case, it will be decent probably in moderate interest rate environments. It'll be good in low interest rate environments, but it'll be very, very bad during high interest rate environments. So that's why I don't like to invest much in junk bonds in this game, especially junk bond ETFs. But still, it's pretty nice to have some diversification. So I'm gonna do a little bit, and then I'll invest $2 million of my money into anything. So now I invest the 400,000 divided by 41.61 a share. I buy about 9,613. Buy about 400,000 of them, and we get about 5% on the yield. So hypothetically, the blue chip fixed income would be the best ETF to buy because it has a higher dividend yield. But right now, interest rates are quite low, or at least they're moderate. So we have three ETFs now, so they're both quite evenly proportioned, and so what I'm hoping is that we can go ahead and apply this $2 million we have in cash towards buying up more long-term bonds and then continue with our strategy. So right now, I think I'm pretty well suited for any interest rate environment. I think I'm set for low, medium, and high interest rates with the government bonds, the corporate, and the junk. And we also have tons of cash. And I don't plan on using all this cash at once, so we're going to start using the laddering approach where we buy up short-term bonds. So 2038. I don't think I need that anymore. Okay. So right now we can go ahead and recall. Right, it's 2038, right? Yep. So we can see right here 2040. So that's about 2 years out, paying us a 7% coupon. That seems pretty nice. So what I'm hoping to do is probably just do maybe 200,000 into this bond. We'll treat it as a bit of an allowance fund. So once this bond matures, we'll have an extra $200,000 to deploy at hopefully higher interest rates. But right now we're going to make a little bit of some extra money just in case if rates stay kind of flat for the next year or two. So hence why I'm buying 1 or 2 year out bonds. Hopefully, ideally, they're discounted. So we bought this bond, it's 2040. So it's 2 years out. So like potentially if interest rates go up heavily this year, I wouldn't be able to really invest it. But we're gonna be okay. 39. Oh! What? That's cool. Oh, you can do 3Com. That's cool. I just hit a 2039. That's great. 8% coupon. So we're gonna make a slight profit off this bond, but it's not gonna be exceptional. And we'll do 200,000 in that. Oh, it's trading at par, so we can just buy 200 of them. 201,000. Not a bad deal. So now we can see that we have 1.6 million, and we bought 2 bonds, 2039, due next year. Trump Hotels, we're gonna get 13,000, 9,000 from Summit Equity. And we're also going to receive, and so I'm going to receive this by that. So we're going to be getting a bit of allowance every 1 or 2 years of 200,000. So that's going to be very, very helpful in disciplining myself to invest. So what I'm hoping is that I'm hoping that interest rates go up in the next while. Let's just keep looking. I'm going to look for like a 2041, 5%, decent profit. 2041, 2040, 0%. This is a good one. 8% coupons to 2041. So this is probably the last bond I'm going to buy, just $200,000 worth. $990. So around 202 of them. Yep, 200,000. So that's enough for buying bonds for today. So we're at $1.4 million in cash and cash equivalents. This is going to hinder our portfolio performance, hence why I bought a bunch of short-term debts. I bought 2041, 2039, 2040, 2040, 2040. So we're going to be getting most of our money back in 2040, but also we're going to get a lot of our money back in 2041, 2040. So hopefully in the next 3 years, interest rates are going to be a lot higher than they are now. So right now we're just going to continuously use our coupons. So these short-term bonds are going to pay us $55,000 versus $9,000. So we put about how much money in? We put 2, 4, 6. I put $600,000 in bonds. I put $600,000 in bonds. And they're paying me, they're paying me $55,000, and right now I have about $1.4 million in cash, and it's paying me $9,000. So right now I'm underperforming the market just because I have cash. So that's why a lot of investors like to say cash is trash. So hence why I'm going to be doing bond ladder. Let's look for 2042 maybe, and do 200,000, and then maybe do another one, and just keep $1 million in cash. 2042, 2042, 2043. This is probably my last buy. This is definitely a few years out. 295,000. That's alright, I guess. So right now we have enough bonds for now. $1.1 million in cash is happy enough for me. So if interest rates continue to drop, I may actually sell all these bonds for a bit of a profit, especially the 2043 one, because that's a few years out. It's a very short-term bond still, because when it'll be 2 years. So this is a 5-year bond. So like it's still pretty liquid. I feel like once you get past 7 years or 10 years, then it gets a lot more volatile. So right now I kind of regret not buying any long-term bonds, but thankfully we have a lot of stock. So we're going to be able to do some of the strategies. What I'm hoping is interest rates continue to fall. It's going to be probably pretty unlikely. It's pretty likely that this is probably the lowest interest rates are going to be right now. What are they thinking interest rate wise? They're still easing, so I have no clue on whether or not they're going to raise rates or not. Banks growing more aggressive. So that makes me think that interest rates are going to continue going down. So once they go down a lot, I'm going to plan on doing the short. Okay. Right now they're... I think I paused the game at 4%. I kind of regret I didn't short then. Let's go ahead and take a bit of a risk. I think this is around 5%, I believe. Should I just wait? What if they fall? 4.4. Should really suppress the earnings reports. I barely ever use them. I'm gonna miss out on this. Okay, I'm gonna go ahead and take a bit of a risky short because this is actually a lot higher of an interest rate that I usually do not short than I usually do, but it's alright. We are at current price of 66. No, 68. So what's the chart been like lately? It's kind of up a lot lately, but it may actually fall in the long term. So we'll do 50%. Hopefully we can make a little bit of a return off this. $1.65 million. So like this is quite risky, but I'm not going to do it. Nah, I'd rather not actually. We're gonna go ahead and take a break from doing that short. I could sell a covered call on it. Right now it's at prudent government securities at 65. You usually pay 55 for it, and that's alright. I don't need to play the short game every time. Once interest rates start hitting the 2 to 3% range in this game, then that's when I'm gonna start doing that, or even the 4, 5 to 6. It's like, it's risky. So right now I'm just gonna sit this out. So our 2043 bond, sadly, is getting hurt quite a lot in value. But if we look at, for example, see, look, this is like this is the advantages of buying short-term bonds. If you look over here, it's 2040. Due about 2 years from now, $1,000 lost. 2039, $900 lost. You can see it's less. You can see. Oh, my bad. I didn't realize I used my out. Okay. I didn't zoom in. So you can see right here, for example, the 2040, 1,800 lost. I put $200,000 in, but look over here, this is less sensitive. So the 2039 bond, which is 1 year from maturity, $900. And then I put 2041, about 3 years out to maturity, $2,000 lost. You can see that as the longer the duration, generally the harder hit it gets. And then the 2043, which is about almost 5 years out, it's hit by like 9,000. That's also because I put a lot more in though. But like that's why having bond duration is important whenever it comes to your investments. Like right now in real life, I wouldn't be buying much of long duration bonds right now, unless you think rates are gonna fall. But it's unlikely they're gonna fall. It's likely they're gonna rise in the long term. Okay. So right now it's about time I start making my investments. So we're gonna start making our investments. I'm gonna put 200,000 to work. A very, very long duration bond. So the current year is 2038. 2038, 2046, 2055, that's decent. 2057, 2056. I think I just need to refine on my strategies a lot more. 2057, 11% coupon. Yeah, that's as best as I can get. Hopefully rates stay this high for at least a year or two. That way I'm able to take advantage of my ladder. Because I'll be very, very bummed out that I didn't keep cash. I could theoretically sell them for a loss, but 200,000. There we go, we have about $1 million in cash. We have a bunch of bonds in short-term durations. Our longest one's 5 years out. Not entirely. We have some smaller amounts. Like we have the Great Wall Technology at 30,000. That's a very, very long duration bond, but good news is it's a relatively small amount. 30,000 is considered a small amount now. Hopefully interest rates continue going up and I continuously make good investments. It's almost 2039. Yeah, so we've been on like the steady, like our chart's been mostly steady lately. We've been going up every cycle, but like a lot because we've been leveraging. We've been buying long duration bonds and doing well. And lately we've been doing kind of flat, but highly likely that next cycle, whenever we go downturn, I'll be able to do pretty well. Hopefully by 2040 we'll have about 5 million. Hopefully. Kind of wish I did my short, but at the same time it was a bit of a risky idea, so I didn't want to do it. Like we could have theoretically shorted it. Like we could have shorted around here, made a decent profit around $17. But I decided not to, because I have to pay operating costs for that short, etc. Okay, right now we looks like rates are kind of on the downward trend. I don't know what to do right now. Oh my goodness, I should have bought bonds. Okay, what do I buy now? 1 million in very, very long duration corporate credit. 2058, 11% still, that's pretty decent. 2058, that's a very, very long duration. Okay, we're gonna take a very, very big risk with this B grade bond. Hopefully they don't go bankrupt. Or else that's practically game over for me. 9, 3, 8. Or if rates rise, we're in a lot of trouble. 1,066. 1 million. There we go. So right now we're betting that interest rates fall, at least in the short term. I'm going to be able to capitalize off that. At worst, I'll be making 11% interest off of all my bonds. So right now we're making about 200,000. After all of taxes, we have 179,000 and $400,000 a year. Let's just hope that rates continue to ease. What are they thinking? They're easing. They better ease. Because I just locked in almost all my money into long duration bonds. But then interest rates were to fall for a bit of extra gain. Hopefully this time rates fall to around 3 to 2%. Or if we're lucky, 1. And they'll be able to take some shorts out and take out some options, and then we can make extra dollars. Come on, follow the 3, please. Yep, banks grow more aggressive. Awesome. Okay, it looks like they're starting to flatten out a bit. Let's go ahead and sell all of our long duration bond, SGen. So we bought this thing for around 1 million of it. So how much money have we made? 1 million, around 100,000. So that's a decent return. So we made 110,000 in capital gains. Subtracted by 93.94. $16 per bond. Divided by 93.94, maybe about 17%. That's pretty decent. So now we have a lot of cash. Pretty great. We have about 65,000 in tax payable. Computer Associates. Hopefully interest rates continue to fall. Part of me is being a little bit greedy, because right now they're quite low. They might go lower. We got our bond back, paid at maturity, so we have an extra 200,000 to spend. Come on, fall rates. We have a ton of, but we don't have a lot of not long duration credit anymore. Interest rates have not been as interesting in this series as they were last season. Last season, I think they were like a lot higher than they were. Still, we're doing alright. Okay, so now we're gonna go ahead and get our short. Where are we supposed to short now? Because I honestly cannot short this. Do we still have our options? No, we don't. So let's go ahead and do a covered call, just for a little bit of some extra premium. Like our permanent government securities has done really well. So let's go ahead and do a lot of covered calls. So we got BCFI. We got about 3,900 shares, so we can sell about 39 contracts. And then we got GBND, sell about 54 of those. And then our junk, I can sell about 96 of them, right? 9613. Yep. So I don't know whether or not it would be smart to short the junk bond. Like, how volatile has it been generally? It's relatively stable. So I'm probably not going to short the... Probably not going to do the high interest bond one. Hopefully interest rates go crazy up. That way I'm able to take advantage of these calls. So we're going to go ahead and do our call for... What is the stock? 75 a share. I'm okay for that. Do a very long duration. What is this for? Government securities. So for government securities, we can sell 54 without being naked. We're gonna make about 50k in premium from this stock. Pretty great. Okay, and then we got our good old buddy Blue Chip. So I could use that 50k for whatever I need. Sell call. $90 a share, very, very long duration, 39 contracts, 33,000 in profit. Cool. So by 2041, I'm betting that rates will be high. Therefore, nobody will convert. So in 2 years, rates will be much higher, which I think is a possibility. Worst case scenario, it doesn't happen. Well, we just lose our shares. I'll be able to reinvest this premium though into anything. What do we have a lot of money in? We have we still have our 2057 bond. I should sell that. Take home some profit. And then we'll go ahead and invest heavily whenever rates hit a buying point. 200,000, 300,000. That's 2043. This is 2041, 2040. We still have a lot of liquidity. So right now we're doing quite well. So now it's 2039. So we have a bonds that are due in a few years. And right now rates are acting very, very aggressively. So if you look at our options, this one is out of the money. This one's almost in the money. Both of them are kind of near the money. It's like 75 will be at the money. In the money will be like if they made a profit, the person who bought the call. So I actually want them to fall out the money. So I actually want these. I want these ETFs I have over the next 2 years to fall in value. And that 50K we made in premium or whatever will be used towards buy up longer duration bonds and continuing for us to do well. 6%. Kind of wish I did my short against Korean government securities. I might want to sell that one and continue doing shorts on it whenever I think interest rates are low, because I honestly could make a lot of money doing that. While I was selling covered calls, my upside potential is much more limited. Tight money fears put halt to stock market gains. It's not even that tight. It's like 6.5%, which is pretty decent. Like, I'll take it. Gosh, interest rates have been very, very boring lately. They've been like, oh, we're just gonna stay around the 6% range. Like, they're not starting to hit the 10% where things get entertaining and they get very interesting. Whatever, I guess. So 2043, 2046, 2052, 2061, 9% coupon. Pretty decent. 200,000, I guess. 220,000, pretty close to what I wanted. About 1.5 million. Yeah, I'm thinking about getting rid of the government securities one, and I'm just simply doing shorts on it because we could make way more than just keeping the shares. But then again, we also wouldn't have diversification. But look over here. Like, look how volatile this thing is. Was I think the blue chip would be, yeah, it's still kind of volatile, but the junk one, I think the junk one's getting hurt the most. No, it's like relatively flat. Weird. Okay, I'll put 200K into a very, very long duration one. Hopefully interest rates continue to climb. 2057, 26. Maybe 2060s. 2057, 2059, 9% coupon, 2060. Let's do health. Yeah, I just closed my stock tickers. Boo. Okay, so we got 200,000 divided by 732. So we're gonna buy up 273. 200,000. There you go, we have about 1 million. So we still have $1 million in cash, which is pretty exceptional. I would like to see my streaming quotes. That way I know where my bonds are. My ETFs I have. Yeah, our ETFs are starting to lose money, but keep in mind we already kind of hedged out a lot of our things by selling contracts. Potentially, it would make a lot more sense to actually sell them. But I don't know. I think it's nice to make a little bit of some premium while I wait. And I'm able to buy it more right now at a discount. Right now, the blue chip fixed income is very, very cheap. Is it? Quite a bit. 7% interest rates. Come on, I want them to start hitting the 10s. Yeah, GDP is now negative, so that has me worried that we were gonna go into a recession. So let's Are we gonna go into one? It's kind of staying flat lately. They may go up. I don't know. GDP is negative, so that has me a little bit worried that rates might go down. What are they thinking? Tightening. So it's pretty likely that interest rates might be going up over the long term. We have about $2 million in bonds long term. Oh, peace signed in Middle East. Long conflict ends. The unthinkable has occurred in the Middle East after decades of frequent wars and conflict. Peace occurs to have broken out. Israel and 6 neighbor Arab states have, after years of negotiation, finally signed onto a security agreement. This comes as a wake of signing the new treaty with friendship and cooperation of China and USA. Almost everyone has halted the new peace accords. Oh, hailed the new peace accords, except of course the arms manufacturers for whom constantly Middle East nations. Oil companies are now none too enthusiastic about the change. Political landscape in the oil regions where frequent wars have helped oil prices at elevated levels. So I'm pretty sure likely interest rates are going to fall. They did. Very, very fast. Let's go ahead and leverage our bond. So like, this is a bit dumb, but let's go and do it. I'm going to borrow $3.5 million. So we're betting that right now interest rates are going to fall a lot. So we took about 50% leverage. Now double B, we are paying 11.5%. So let's just hope that interest rates continue to fall. And we can continue to make bank off this leverage bond that we just took out. Hopefully we can hit the tens of millions. %, 3%, 3.8, 3.7. So we're taking out like 50% leverage, which is the most amount we're allowed to take out. Each went up 20 points. Or maybe that's how you say it, 0.2%. Oh, my Spotify crashed. Damn, that's rough. What are they doing? Are they easing? They're easing. Part of me is thinking that interest rates are pretty likely gonna stay low for a bit. Then again, part of me is thinking about taking my profits and just running. It's probably ideal right now, yeah. Yeah, we're chilling on negative GDP right now. 3.2. They fall. Okay, so now I'm going to stop being greedy. So right now we have a very good stock portfolio. We have $1 million in gains from this government bond that we bought. So I'm going to go ahead and say that is a good leverage buy. So 165 per bond, .68. Subtracted by 130 we bought, .28. Divided by 130.28. About 27% return, leverage. So we got like a good return from that. So let's go ahead and sell it. Take our $1 million in gains. So we made about $1.3 million in realized gains. Awesome. So right now we have about $6 million. We have to cover our loan. So we'll cover our loan. And we had $3 million in cash. Pretty exceptional. So right now we have, so we went from about 3.6 million to almost it's about 5 million right now. So we're at 5 million, what I wanted to hit by 2040. So we did reach our goal. Pretty exceptional. And so if interest rates continue to fall, we're gonna use our we have some long term. We only have this one. Dang, I wish I bought more long term bonds. We did. We bought 2061. See, so this is the only very long. This is just one too, I guess. So we made good returns off those two corporates. Okay, I'm gonna go ahead and cover those. Take my profits and run, and then simply go ahead and try out health. Capital gain of 124,000. So we're at $3,400 in cash. Still a bunch of liquid short bonds and some relatively long ones. We're alright. And we made a lot of money off this permanent government securities ETF. Part of me is thinking that interest rates over the long term are going to go up. Or they may stay low for a while. Who knows? Okay, I'm going to go ahead and try out something a little bit risky. We have a bunch of covered calls, right? How many contracts did we sell? We sold permanent government securities. Right now it's quite in the money. So right now you could theoretically sell us for a loss. So we have about 54 shares. 54 shares times 100. 5,400 shares times $75 times $78. Right now what's that? $400,000 we could potentially lose. The problem is I'm going to sell these shares and then short the company. So if the price of it falls, we could potentially lose a lot of money. What should we short instead then? Can you, I don't think shorting the junk bond would be a good idea. I would like to short banks, but right now would not be a good time to short a bank. Plus I don't think I'm allowed to, because it's technically not considered a bond. Like right now with insurance companies, like if I look at the summary, for example, some of these banks might be good. Some of these insurance companies, none of them's too expensive. What about banks? Is this the one time I'm gonna allow it? Short. This company is very expensive. It's like 2 times the book value, higher than the industry norm. They have a ton of government bonds they could potentially sell. A ton of CDs. What's the price been like? It's up a lot lately. Is there a correlation? A little bit. So MFG would potentially be a good short, potentially. But I don't know. I'm gonna do bond only. You know what? I'm gonna write my own rules. I'm gonna short MFG. Okay, so what we have is 5 million in cash, right? It's maybe the stupidest idea I'm ever doing right now. I'm gonna short a bank, which is like not like shorting like a ETF. You know what? You know what? Let's go ahead and take a bit of risk. How much call exposure do we have? We have more call exposure to that. So I might as well sell the government securities. So we're going to go ahead and sell this. We're going to go ahead and enter into a naked call for this company. So we went and sold it all. We realized capital gains. What I want to do is I want to sell it short now. So we're going to sell 2.5 million. 2.5 million shares of this. Divided by 78 a share. So we're going to short sell 32,482, and then when it does drop in value, we're gonna buy it back ASAP because I don't want this ETF. If interest rates tank though, we could potentially lose everything because I took out quite a bit of leverage, but I'm gonna be betting that interest rates are gonna go up. Hopefully trends are right for me. The reason why I'm afraid of bankruptcy, we actually didn't borrow a lot of money for that. Yeah. But we actually have a ton of calls that are due at $78 a share, so we may have to pay like 400,000 just to keep that alive. We may have to pay 400,000. Yeah, I'm gonna go to bed soon too. Okay, right now GDP is on fire. They're neutral. So I'm gonna go ahead and let's go ahead and YOLO a bunch of our money into this prudent government securities. Sell a short on it. So let's just do another 32,000 shares. 2.3 million. It's like that's probably almost all my money in a short. Yeah, it's almost all my cash in a short. So right now we have a lot of short exposure, but I'm betting that interest rates are going to go up, and so hopefully they go up because GDP is booming, and that's part of me thinking that interest rates are going to go up a lot. So hopefully they go up. So we have a break even at $75 a share. Plus we have to borrow about 400,000. And how much money do we have? We can borrow a lot of money though. That's good. But the one problem is we have this thing. So this thing, right now it's below the strike though. That's good. So it's highly unlikely he's going to exercise me, and I'll lose like 400,000 or something. So I'm going to do it right. If interest rates stay high, hopefully they continue to rise, and we'll be able to make a giant profit. $70. How much have we made off for short? 200,000 yet? Yep, looks like it's coming back to normal. So once it starts hitting the 50s for the prudent government securities, I'm planning on covering my short and then buy more long bonds. So right now we're doing quite well. Right now it's at 7% interest rates. That's pretty great. So right now would be a great opportunity for me to probably cover my short and make some other investments. Almost 8% on the short bond. Hit there, please. Nope. Oh, yeah. Okay, they're staying kind of flat right now, so that has me a little bit worried. Yeah, the longer it stays like flat, the longer we actually lose a lot because we actually have to pay the operating cost. And I'm not making investments right now, so like it's probably better that I just cover my short right now. Right. Oh gosh, our options are coming due. We should be fine though. It's pretty unlikely he's gonna call it. Uh-oh. Okay, that's it. We're gonna cover a short. $800,000 in gains. Let's go and cover it. So we sold a short around 75. 62 is our price. So we sold 75.64 subtracted by 62.99. $12 in return. Around a 16% return. I'm pretty sure I'm supposed to divide by 62 though in order to get the actual return. So I actually might be understating my returns by a bit. We buy back 64,000 shares. Take home about $817,000 in gains. So right now we have 4.7 million, and we also don't have any options due anymore. So that's great. So that short actually worked out pretty well. And so now I think it might be a decent opportunity for me to invest a little bit of my profits. How many taxes? We have 219,000 tax due. Can rates go up a little bit, please? Investors are worried about weak economy. Okay, let's just do a long duration. I don't want to bet a lot of my time. I don't want to bet like that interest rates are going to stay, or I don't want to bet that interest rates go up because I might miss out on this opportunity. 2061, 10.9%. Let's go in and go for it. So we got about 4 million. I could theoretically just do 4 million of this bond. Pays 10%. 4 million divided by 82.3. 4,800. 4 point something million. So we put all of our money in one bond, which is pretty stupid. So right now we have a ton of T-Mobile US bond, which is going to pay us about a 10% coupon. So right now if rates fall, we'll make a lot of money. Hopefully. If rates rise, we're in a lot of trouble. But then again, we also have no financial commitments. We're not naked or anything. We are covered. Like we don't have any options, so that's good. We have $0 in loans. We have quite a bit of liquidity. So we're alright. So if interest rates continue to ease, we're going to make a lot of money off that T-Mobile bond. I'll be able to buy up more bond funds. Continue my short on that ETF. How much money have we made so far? We made about 700,000 in profit. %, so it might be a decent idea to take my profits and run. What are they doing? Are they easing? They're neutral. So right now it might be a good opportunity to take my profits and run. Starting to test the new lows at 3%. Okay, so that's enough paying for now. Let's go ahead and take our profit. We owe $1 million off that deal. $1 million, 1.1 million capital gains. So right now we're at 5 million. Round capital gains of 2 million. We have about year-to-date tax of 500,000. So right now we're at 5.7 million. $6 million, 6.8 altogether. So we're doing pretty well. So I feel like that's gonna quit for today's episode. We grew our wealth quite a bit today. Grew a lot actually. Cause like I think last episode we had like 400,000. So like this episode we're able to grow our wealth like a lot. So we started around here, around 1.6 million, and we're able to grow it to 6.4. So I'm hoping next episode is interest rates continue to fall, and then I'm gonna be able to do another short on the government bond. Interest rates go up, make more, and then eventually I'll be able to hopefully beat my record. We're quite close to my record. We're at 6.8 million right now, and we have 11 more years to go, so that has me a little bit anxious. So when we do finish the series, I'm thinking that it might be a good idea to maybe refine on my strategies a little bit more, because I made a bit of mistakes during today's episode, but I think I did alright. Anyways, I'll talk to you guys later. Hope you guys enjoyed. I think we did alright. I think we did alright today. Anyways, I'll talk to you guys later. Have a good one. Bye bye.